This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today's going to be quite a significant day. We're going to be needing to examine the closes very closely as we head into the end of this week. Now, today at about 12:30, we are going to get the PCE data. Now, if this can come anywhere close to the current trend we've been observing in the CPI data, this should come in cold. Now, PCE is significantly less volatile than CPI. The basket is completely different, so it may or may not be cold, right? Probably if it is cold, it's not going to be as cold as the CPI. But any kind of cold-ish print in here, and we should start to see rates repriced, certainly for June, and maybe even start to be put back on the table for May's meeting, which is of course net liquidity positive for markets and should provide some glimmer of hope here to see further upside in the likes of the stock market and crypto. And speaking of net liquidity positive, we know from the last FOMC meeting, the Fed is going to be reducing the rate at which it runs off the balance sheet. And it's going to do this approximately by half. It's going to be slower for longer, which again is akin to QE at the margin. If we're going to be reducing the selling pressure, that is net liquidity positive for markets and tells us to keep an open mind about higher prices walking forward. On top of this, we've got even more net liquidity positive drivers showing up here as the Fed is being urged to currently mull a hedge fund bailout facility for basis trades. Feels an awful lot like another one of these stealth QEs, doesn't it? Another one of these QEs that does not identify as QE. Certainly feels a lot like hide the bailout on the FDIC balance sheet. It sounds a lot like the BTFP, which was another form of stealth QE, doesn't it? Sounds an awful lot like reverse twist, Operation Reverse Twist. And there have been more and more and more of these that we've been covering over the past 2.5 years. And now we've got another similar QE, not QE, showing up as the Federal Reserve are being asked to set up an emergency program to close out high leveraged hedge fund trades in the event of a crisis of the 29 trillion US Treasuries market. Okay, pretty bad, right? This would involve hedged bond purchases, which would allow the Fed to intervene in the market without removing duration from the Treasuries and blurring the line between financial stability operations and monetary policy. And this proposed basis purchase facility would involve auctions of bundled basis packages, allowing the Fed to set a minimum bid price and limiting moral hazard, sure, and would be a more elegant solution to outright purchases of Treasury securities. Now, why is this so important? Notice that they don't want to move back to outright QE yet. Once again, I maintain they are going to continue to be late and reluctant to react here. They're going to continue to be late and reluctant to actually get the printers spooled up. I'm not one of these people that says printer is coming, QE is right around the corner, all of that jazz. Okay, it's not coming for a long time because they are going to continue to be late and reluctant. But notice once more, we've got another stealth QE here, another form of QE that does not identify as QE, because without all of this intervention, these markets would implode, right? They need to do this stuff, it's just they don't want to. So all we need to see today is PCE come in slightly cold, which would make an awful lot of sense based on our analysis. We would start to see net liquidity positive actions as we start to put more rate cuts on the table than are currently priced. We also have the knowledge that as we get into April, which is just days away now, we're going to start to see the rate at which QT is occurring, or balance sheet runoff is occurring, slashed in half. And now we've got more QE, not QE, stealth QE, hide the bailout type deals under the hood. All of this is, of course, net liquidity positive for markets, which should allow us to see relief, if not new highs coming in. And on top of that, I am not one of these people that really believes and subscribes to this idea, right? I've shown this a bunch of times. We're not going to cover it today. This is, if we're honest, a cherry-picked snapshot that really misrepresents the correlation between the two. But again, global M2 moving higher is net liquidity positive for markets, and therefore, if there's any credence or credibility to this idea, we will see Bitcoin start to push off soon. Now, again, I'm not one of these people that thinks that's the case. I do think M2 moving up like this is net liquidity positive for markets, and I do think that means higher highs can come. But this correlation is not what it looks like. As soon as you overlay these charts for yourself and zoom out, you can find that pretty easily, as I've shown dozens of times before. But based on everything I've shown you so far, okay, liquidity is up, and when liquidity is up, we tend to see that manifest as higher prices walking forward. All of this occurring, of course, on bottomed daily and weekly cycles so far that are currently holding. Now, I know there's a whole war going on down here, right? Holding those cycle lows. But again, thus far, they are currently holding. Bottoms are a process, and that process is currently being worked out. In other news, we've got GameStop about to follow MetaPlanet and MicroStrategy as it's just about to raise $1.3 billion to buy Bitcoin. Pretty crazy. Now, the market does not like this and the shorts have exploded, which I find quite interesting, to be completely honest with you. And at the same time, GameStop currently has about 4.6 billion cash, which means it could service a loan of 100 billion over 4.6 years at 1% interest. And this would be twice the amount of Bitcoin that Michael Saylor's MicroStrategy currently holds. So this could be absolutely crazy, especially with this, which is like a financial bomb waiting to go off. I continue to make the case that being bearish here and calling tops is a little bit early. And CryptoCon shows down the bottom, the MVRV has this green line across here, which he terms the good retest line. And any time that we get a good retest of this green area, okay, it tends to mark lows in a bull market, similar to what we saw in 2017. And we've seen it all again in here, okay, good retests occurring on major lows and higher highs coming thereafter. When we get what he calls bearish retests, okay, bearish price action, bear market type deals, the MVRV comes all the way down to the bottom red area, okay, in here. And we don't have that at the current moment. At the moment, it looks much more like a healthy retest that is going to resolve to higher highs. And that makes a lot of sense from a cycle perspective. So it tells me to keep an open mind about higher prices walking forward. We can keep it even simpler than this. We've got a weekly swing low in play. Okay, we're about to close week 3 somewhere in this neighborhood. We are still making weekly higher highs. And here's the key part, higher lows. And even more important than that, we are still currently trading and holding above the year-long average. So being bearish here is simply malpractice, right? This is not a broken trend yet. This is still an uptrend. This is still looking potentially for higher prices in the not too distant future, particularly if there's any merit at all to the idea that liquidity is increasing, which of course it seems to be. And on top of that, all the ingredients for an explosive move are here. We have got cycles bottoming, looking to turn up in the not too distant future. We've also got RSI breaking a downtrend line, and this is on the 2-day time frame. We've also got RSI breaking out of a shorter term trend and looking to break out of here in the not too distant future on the daily time frame. We have got the stochastic RSI weekly time frame looking for a cross and to move bullish to the upside. We've got the Bollinger Band width compressing, telling us that the next move is going to be explosive, and the MACD looking to start to produce a bull cross to the upside in the coming days and weeks. All, I might add, on a sea of very overconfident bears at the moment. And one of the most bullish things in Bitcoin's existence is the death cross. For some reason, this asset, I think it's because of the volatility, behaves totally different to how most assets will behave during a death cross. Usually death crosses will be extremely bearish. But in Bitcoin's case, okay, every time we see one, we see pushes to the upside. Every time we see one, we see big pushes to the upside. And it looks like we're closing in on one again, telling us to keep an open mind about much higher prices walking forward. Meanwhile, according to Plan B, Bitcoin looks extremely undervalued compared to gold and the housing market. Bitcoin's market cap is just 2 trillion versus gold at 20 trillion, with Bitcoin's scarcity being 120 versus gold at 60 years, based on the stock to flow ratio. So let's see what's just around the corner here. Here's silver, this circle right here, okay? Here's gold up here, and here is real estate, with Bitcoin significantly below. Meanwhile, over in the charts, Bitcoin looks to be thinking about breaking down, doesn't it? So is that coming? Is this low going to hold? Time will tell. Notice how we are also pressed right up against this line here. So again, it's not going to take much, right? I think a hot PCE print today, and we can interpret that as bearish for markets. Probably expect to see a retest of the cycle low. I still think higher low is probably more likely than a lower low here, but time will tell as always. But I do think a little bit of a cold PCE print, okay, and markets can start to look forward into April, where we know there's going to be increased liquidity, and I would not at all be surprised if this thing pushes to the upside and gets a true breakout here. You may even see me add if we get a breakout here. So we'll see about that. The stock market appears to be currently backfilling the gap. Again, pretty similar deal. I think if we get a cold inflation print today, we can start to resume the upside. We can hopefully see the VIX crushed as we experience another VIX crush Friday. And all this will be is a cycle low, a gap, a backfill of the gap, and then a resumption to the upside. Again, though, get a hot PTE print, and we may have to come back down and retest the lows. So we'll see about that. Gold continues to rip higher as expected. That was indeed the half cycle low. And as suggested, we are pushing up to one final higher high before then we can head down to a daily cycle low. I really am expecting silver to start to massively overperform after we find the next daily cycle low. So I'm looking for something like this, daily cycle low, and then I want to see this, okay? That's what I'm hoping for with silver. Again, still positioned via the silver junior miners. So we're doing okay. We're doing okay. What else is there to say, really, apart from should be close to finding the daily cycle and the weekly cycle low for the Dixie here. So any day now. I wonder if the lower PCE data today can catalyze the final push into the weekly cycle low for the Dixie. And notice how we've got a perfect touch of resistance here for the 10-year yield. So we always, with a 10-year yield, have to be open to a fake out like this, okay? It tends to do that quite a lot in my experience. But so far, I was talking about this for weeks now. We get a touch of resistance, and then I want to see this thing push down as per my tell that to the bond market yellow squiggle. And it seems like we're at that moment. So as I said, let's be really, really clear. It would not at all surprise me if we do get a little bit of a fake out and then it rolls over. That's just a thing the 10-year yield tends to do. But either way, within the next few days, I do expect this to start moving to the downside. And particularly if we get cold PCE print, okay, then the bond market's going to start to tell the Fed to put the cuts back on the table. Okay, and again, all of this speaks to risk on, speaks to having higher market prices for the stocks and Bitcoin walking forward. So going to be a nice wrap up to the week. I'm looking forward to the deep dive. We've got some GDP data to review in the deep dive tomorrow as well. Other than that, I hope you're doing well in life. I hope you have a fantastic weekend. And until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies on a